Greetings everyone, welcome aboard. Joseph James, SchoolOfTrade.com. It's July 1st, 2010. Here's your live stream recap. Boy, we finished up a record-breaking month of June, had the biggest month of the year. And I guess it wasn't enough because we just had the biggest day of the year today, the 1st of July, here 2010. We'll talk about more about that here in a second. Want to remind you guys, though, all the notes from today are posted on our blog under that brand new section called Trade Room Resources. So I take notes all day long. I post my notes on my blog. I put my recap video on the blog. We put our trade calls on the blog. All the information about our articles, all the tips and tricks, everything we talk about in the room, guys, you can find it on the blog. Subscribe to the blog. Follow our blog. That way you always get all the new information. And don't forget, the new spot there is called Trade Room Resources. Trade Room Resources is the brand new section we've added on the blog. And don't forget, there's a search box there if you want to find specific information about a certain topic that you want more help with. All right, so check the blog out. 2, 4, 6, 8, 10, whoa, 11 total trades today. No losses today. We took a loss yesterday, almost cost us a winning day yesterday. Today was a little bit different though. Big day today. 200 ticks. We were on fire today. It feels like every single person this morning was making money on gold, crude, euro, Russell. We had a one contract, 60 tick winner today on Russell. Right? We had a couple of members trading the 21 range method we talked about yesterday in the live training. Right? Remember, guys, yesterday we talked about that slower time frame method, and we had our members using that in full force this morning. So congratulations, hats off to all the members who made a ton of money today. For all the guests that came out and joined us today, if you were here for the first time today, you saw a fantastic amount of patterns. It moved pretty quickly out there. And of course, we had to keep up. So if today was your first day with us today, don't worry. Today was one of those days where we saw lots of patterns. It's usually not this fast. Okay, but come out. Make sure you guys come out and join us in the future. And we'll be able to answer a lot of your questions you guys had today, because I know a lot of you, the new guests today, had a lot of questions. So it moved real fast today. Make sure you guys come back out and join us next Tuesday when we come back from break here. And we'll slow things down a little bit. We'll answer more of your questions. And as always, right, drop me an email, contact our sales or support team for more information. So we're closed tomorrow, but we finished up a great week, guys. Look at this. We did $3,300 the first week in this month, $5,300 the second week, $3,400 the third week, $4,500 the fourth week, and we just finished up the last week here now of the quarter, $5,000 this week, guys. This is the way to do it. $21,000 and change, guys, for the month of June. I'm sorry, we're going to be talking about $19,000 and change for June, and then, of course, we'll add $2,000 for the month of July. So what a great way to finish up our week. Great way to get the month of July started. 200 ticks, $2,000. And of course, what happened today, we really didn't know what to expect. It's the end of the week for us. Okay, Friday, of course, the markets are open, but expect to be real slow because of the holiday. So today was kind of a mystery. But we were ready. We went through our morning routine. We were ready to take the trades if they did show up. But we were aware that today may be slow. We had a sluggish beginning of the day. We saw a bunch of wedge patterns, but then all of a sudden the dollar began to sell off, and it began to drag down gold along with it. Kind of an odd, set of price action this morning because it really began to sell off the dollar. But guys, usually the dollar and the gold will be going opposite directions, so it's a little bit of a different scenario today. But guys, all in all though, the volume came in late. Let's look at the slower time frame charts to kind of see what the morning looked like to begin with, and then you'll see what happened thereafter. So when I opened up my chart this morning, 7:45, 8 o'clock this morning, I look at my gold futures first, right? This is a 21 range chart. And what do we see? We see right away here, we can see we've got the wedge pattern. So we've got the wedge pattern, trend line coming down, trend line coming up, and of course inside this wedge pattern, we now expect gold to get real tight and choppy. But what happened this morning? We waited for it, it broke out, and then began to tumble here the downside. So when it comes to a wedge pattern, as we said before here this week, we need to wait for price to break out of this wedge pattern, right? Because inside that wedge, right, we're going to be very choppy, very slow and sluggish. We're going to want to see this thing break out. As you guys know, it did. It tumbled big time to the downside, but it had to break out first. Now remember, guys, at this point in the day, we don't really have that much information. Okay, at this point in the day, we didn't know we were going to have this big move today. So all we could do at this point was simply be ready to react. We start with our slower time frame first. We mark up our support and resistance. We notice the wedge pattern, and we now are ready to react to whatever the market does. If the market stays sideways, we'll keep sitting on our hands. If the market breaks to the upside, I'll look for buy orders. If the market breaks to the downside, I'll look to the sell side. All right, so that's what it looked like there on gold here when we opened up our chart this morning. Same thing was true in the euro, right? The euro also, the sideways wedge pattern. All right, now we saw something happen today a bunch of times today, and I really wanted to point this out for you guys. If you learned one thing from this video tonight, this is what I want you guys to learn. And that is the importance of understanding what's really going on behind the scenes here on a reversal pattern. Now, real quick here, the blue line is the low of day. Now, my low of day is what I call a high profile level, which means the most eyeballs are watching that low of day. Right? Everybody has the same low of day, right? I think you'll agree. No matter whether you're trading on a 30-minute chart or a 3-second chart, everybody has the same low of day, which means when it comes to understanding how the self-fulfilling prophecies work, if everybody's watching the lows, we should expect those to be pretty interesting areas. In fact, the lows are expected to hold. So when we come down and we bounce off this low of day here, we're expecting to take a two-step pattern long, right? A reversal off the low, back to the upside. But guys, this is something that really gives us an easy heads up, and it's right here. It's a one tick lower low. Now, when I say one tick, I mean it could be 3 to 5 ticks, right? But it's a very small new lower low. Okay, so there's your brand new lower low right there. You can see it's just a couple ticks right below the previous low. Now, this is what I'm talking about when I say understanding what's going on behind the scenes. Now, what do you think's happening right here? Well, what's happening is the sellers are putting together one last final push, right? So ready, 1, 2, 3, push. And the sellers are going to try to drive this market down. But as you can see, there's proof here that they either A, didn't have enough, right, oomph to the downside, there wasn't enough pressure to the downside, or B, the buyers could be ready, willing, and ready to go, and they could be trying to push this thing up. So whether the sellers didn't have enough or the buyers had too much, right, whatever the reason is, all we got was this one tick lower low right there. All right, now think about it. If I'm the sellers, right, I'm pushing down, I'm pushing down, I'm pushing down, all right, until all of a sudden now I'm exhausted, right? Oh, I can't do any more. I've got no more contracts. I've got no more bullets left in the gun. And so now as I keep pushing, ready, 1, 2, 3, last try, push, and then all of a sudden, oh, we're exhausted, right? So the sellers lose all momentum. The sellers now are out of ammunition, right? The buyers now can feel that, right? We're all watching tape. So we're reading tape, we're watching the tape right now, and we can see the buyers now starting to pick away at these lows. All of a sudden, momentum curls and points back up. We get big buyers in the tape. The speed of the tape, the pace of the tape indicator begins to rise. And now we know those sellers are now in a very bad spot. And now this two-step long becomes a really high percentage trade. All right, and it all starts with watching for that one tick lower low, right? That one tick lower low. That's the key here, guys. Okay, think about it. It's those sellers giving it one last push, and they're going to run out of gas. It's going to reverse back to the upside. All right, we saw that a couple times today, and I want to make sure if you learn one thing today in this video, understand that. All right, let's get started here. We took a bunch of trades today. Now, the first trade today happened on gold at 910. This is a breaker pattern short. Short-term trend is down. I can tell the trend is down by looking at the slope of my trigger line. We're going to break below support here, 36.5, mark up our swing low, and break below that swing low. This is a real easy pattern. It's called a breaker pattern, and we took it short. 35.9 was the fill. Now we just barely got that +4 target filled there. You can see +4, 2 off at 4. Move that stop down to entry -1 to lock out all the risk. Right, +1. We got stopped out there, and then it tumbled. Now this was early in the morning, 9 o'clock. So we hadn't even seen the volume really pick up yet. So we're still looking at some pretty slow volume at this point. We took 10 ticks or 100 USD for our first trade here in the gold. All right, next up, again on gold, about 20 minutes later. Now this time we're coming out of the U.S. Open. We began to see the speed now begin to pick up. Right after 9:30, the U.S. Open, speed picks up. Short-term trend is the upside here. We're going to break above overhead resistance, right? All these red lines, all the blue lines, everything, guys, is all added for me automatically. I don't add any of this stuff on my own. Okay, the indicators do it for me. I'm going to mark a swing high. Now, once I break that swing high, that's going to announce to the market the buyers are in control, and therefore I want to be trading at the break of that swing high. 36.9 was the fill, 12.36.9. We took 2 off at +5. We then moved our